Short exercise 5-10, adjusting for inventory shrinkage. Southwest Furniture's adjusted merchandise inventory count at year end is 63,000. The physical count of inventory came up with a total of 61,900. So that is less than what they had in their inventory account unadjusted here. So journalize the adjusting entry needed to account for inventory shrinkage. Record debits first, then credits. Select the explanation on the last line of the journal entry table. So over here on the right hand side, I have my electronic scratch paper. This is just Excel. I would recommend you do this on scratch paper. So I've got this merchandise inventory account. Remember, the plus side is on the left side, the minus side is on the right, as this is an asset. So we have our balance here before adjustments, which is 63,000. But then we sent our interns and they count the inventory and they find that we only have this 61,900. So we need to adjust this amount, the 63,000, down to 61,900. So how do we get this account down? Well, I'm going to have to adjust it by the difference. So I'm going to take that 63,000 and subtract 61,900. So then I'm going to pop open my calculator here. So then I'm going to take 63,000 and subtract out 61,900 to get that difference, which is 1,100. So I'm going to go ahead and close the calculator and input that amount here in our T account scratch paper. So that is going to give us, again, that double check here of a balance of 61,900, which is what the physical count was. So we know we've adjusted the account properly. So we know this is going to be a credit, so we're going to skip the first line for our debit here in a minute. We have merchandise inventory that we are lowering by 1,100. And now this also means we have to debit an account. And the account we need to debit is cost of goods sold, which is an expense. So with expenses, they increase with a debit because losing inventory or getting it stolen or having it damaged or spoiled, that's just part of the cost of doing merchandising business. So I'm going to raise cost of goods sold with a debit of 1,100. And then we're going to need an explanation down below, and that is adjustment for inventory shrinkage. After this journal entry has been recorded, then we would go and do the posting to the T accounts or the ledger, and that's it. Let's go ahead and check our answer. Well done.